Welcome back to Step Index. We are looking at it on a daily time frame. I hope that everyone is doing well. I'm on my side. I'm doing well. All right. I know I've been absent for quite some time. Well, my strategy is timed based. So whenever I'm posting a video, that means I'm basically looking at something that is interesting based on my strategy. So yeah, you're gonna see videos when I see something interesting to talk about. Okay, so I'm not just going to be producing videos, giving you a general commentary that is not really giving you the germs that you're here for. So I like to wait it out and produce quality videos. Okay, I do have a brother who just lives next to me, right next room, and he kind of makes noise sometimes. So at those times when he's home and not at work, he's essentially enjoying chill music, sometimes house music, whatever music that he's into. I don't like his music at all. Right, we are different people. So at those times that he's listening to his music, he puts out big speakers out and volume out, and he gets drunk and all of that. And yeah, so I don't produce videos at those particular times. But when he's not around, maybe he's at work or seeing somebody out, I'm then presented with an opportunity to present you with price action, right? That is unprecedented, right? And that's what you're here for. So in the past video that we were talking about in July, the July's commentary is comprised of, if I could give you a crude depiction of what I did in July, you'd be surprised, right? So let me just give you a rough idea. We had seen price action dropping lower, all right, continue dropping lower from the fair value gap here, right? And it had continued going lower because it had this sell side liquidity that it was gunning for, right? So yeah, man, we had the contrarian trade set up in June. If you guys did not see that in June, you've missed out on a good trading opportunity. But otherwise, look at June's commentary, and I teach that we have a framework video in June. If you can look at that really shows you the model that I trade. All right. Besides that, or let me give you another example of the very same model that you're seeing here, transposed on the upside. We were looking at July's commentary around the 20th to offer us an opportunity to go counter trend and attack this particular mid-month of July. So that's what I called out for. Now, as price gets closer and closer to that particular high, there are inefficiencies, right? So price action is going to have a lot of trouble with this particular inefficiency. Now that is the mid-month fair value gap. Well, man, there's so many fair value gaps. This is the fair value gap for you. Well, number one, my fair value gap from the daily time frame is timed based. Always when I'm talking about a daily time frame, it's time based. So this inefficiency here is occurring after we've printed out the mid-month high. Now the mid-month high is associated. Now the mid-month is associated with a swing high or a swing low. So here we're looking at a swing high that is formed around 7,924.7. That key level right there. If I'm going counter trend, this is when I take profit. But essentially this high, after it forms, it has a fair value gap that moves away quickly. Now, there is a big candlestick right here. So that big candlestick is my bearish order block. Okay? It's the beefiest candlestick out of this swing high. If you're looking for an order block, let me give you a tip. It's the biggest candlestick right before this move decline. Okay? So that swing high around the mid-month, well, closes below the beefiest candlestick, and that creates a market structure for me. That's what defines it. The change in the character closes below that as a market structure shift, proceeds to go lower, and attacks this particular January low. And then we had formed the contrarian trade model that we are anticipating this high to be attacked. Now, that is still the mission, guys. We are still looking for this high to be taken. So we are having a little bit of trouble in the mid-month of July. So yeah, man, that's what price action is doing. It's struggling with this fair value gap. So we've came back around the 29th of July, and we went lower just a bit. And we tried one more time in the opening of August. Now that's what I'm here to talk about, okay? The opening of August, right? So here it is, guys. Let me put out the Johannesburg so that I can see where the 1st of August is, okay? So there it is. Ever since the opening of August, we've never had a fair value gap up until here. So I want to know about this opening, okay? This fair value gap. So I'm going to zoom in and I'm going to grab some details from the opening of August that is going to tip me as to what price action wants to do. So I'm actually reading how the opening of a new trading month is, well, presenting price action to me. So I'm essentially out here, right, in the opening of August, and I'm seeing price action consolidating a little bit and finally giving us a fair value gap. So the fair value gap is in yellow, okay? If I'm looking at the daily time frame, in this time period, okay, from the opening of a new trading month all the way up until this day, the 9th of August, I'm looking for a fair value gap. I'm looking back, and we've had a market structure shift here. We've closed above this particular high. We've challenged the mid-month of July. This is where we want to go, guys. Okay, so price action is retracing back into the opening of August. Can you see that? It's trying to get down, but it's met with this fair value gap. So now we are at a time that we anticipate this fair value gap to offer us a support to send price higher. That's essentially the idea around the first fair value gap. Okay, the idea is we are utilizing what happened around the July, the contrarian trade setup. We went higher with it. So around this particular time, we anticipate that we are going to continue with the movement higher that started in the contrarian trade setup of July. Why do we want to go higher? Why? Well, essentially, we want to rebalance all of this inefficiency that occurred around the middle of July. We want to take out those inefficiencies, take out those individuals that had sold short. I mean, they're pretty obvious, okay? They can't hide the middle of the month, okay? It's really out there, guys. So when I am anticipating my contrarian trade setup, this is the target. So far we have not yet reached that target. So I want to see price action going higher. So this fair value gap is a potential candidate. So as we drop down into the lower time frames, we are going to be qualifying this fair value gap as a potential key level to send price higher. Okay, so let's drop down into the hourly time frame. So here is my hourly time frame. Okay, this is the very first opening of August. So I'm going to switch my time zone back to New York. Okay, that's what I like to do. And I'm going to be explaining to you pretty advanced price action. So if you're new, yeah, you're not going to understand it pretty soon. You're not going to understand it, but I'm going to put it in a way that will at least put you ahead. Okay, if you're new, brand new, look the market the way that I'm presenting it to you. Okay, so remember that I switched my time zone, and the beginning of August is right here. The very first of August is right here, guys. So as I switch my time zone, it says August opening is around here. Okay, that's fine. You know, the time zone is an issue for me. So yeah, we are going to have a little bit of trouble navigating the time zone issue, but it's fine. So let's just keep up with the lesson, okay? Now here it is. In the beginning hours of the day, or the beginning days of the month, we want to be anticipating a setup around the opening of that particular trading month. Now, there are many ways that we can do it, but essentially, we want to be participating near the opening of that trading month. Okay? The daily range, if you want to participate in the daily range of that particular day, of that particular month, okay, if you want to be participating in a monthly range or a weekly range, meaning that you are participating in the opening, maybe going bullish, and you're closing off just before that particular week closes, maybe on a Friday, if you're trading your Forex markets. And you know, in Step Index, we don't have a particular trading schedule like how we have the real world markets. So it's the weekend now, the market are closed, but we begin trading in Monday. But for synthetic indices, we don't really have that kind of structure. So the market is always open. But we begin a new trading week. We begin a new trading week in Sunday. Okay, so Sunday, what have we done since the opening? Okay, I'm gonna put out the session breaks so that we can look for the opening of the day. So the opening of the day is right here. And essentially what we are doing with that particular opening, we want to see a fair value gap. Now I've already picked out the fair value gap high. Okay, let me make it a bit darker so that you can appreciate it. And I'm gonna copy it to the fair value gap low. Do you see that? This is the beginning of the week, guys. So essentially, the very first day is going to have some erotic price movements. It's going to be, well, it's going to be injected with volatility. Let me put it like that. So we've had this consolidation, and today, in the beginning hours of the day, we have this inefficiency. Now, throughout this particular week, we will maybe anticipate a setup above that fair value gap because we want to go higher, good people. Okay? We want to be going higher. But for now, we are going to be looking at that fair value gap and qualifying that setup. Okay? So what we've essentially done ever since we've traded inside of the daily time frame mid-month fair value gap, we've essentially resisted in that fair value gap. And here we are printing the opening first week fair value gap. Now this is the daily opening fair value gap here. So I want to see how price action will utilize this fair value gap to go higher. Okay, I'll give you another example. Look at the Sunday opening or Monday opening right here with this fair value gap here and right here. This is a new day fair value gap, and price is essentially respecting that fair value gap. It came back in there multiple times, but supported on the very same fair value gap and went higher. Do you see that? There is another fair value gap where I showed you guys a setup utilizing the new day fair value gap right here and right here. Do you see that? I did a little video showing you guys my trading setup, and this is one of the key levels that I was looking at that particular Sunday. All right, and I just essentially looked at this particular first fair value gap on the hourly time frame, and I said that price action is going to trade inside of it, support on that fair value gap, and go higher to take out the buy side liquidity. And that's what price action did. It was really quick, nice price action, just within a few hours, and my take profit was hit. And ever since then, we had this decline of price action going lower, challenging this particular low, but failing and responding with a new day fair value gap. And ever since then, we've respected this fair value gap. So we've then went higher, we then came back into this very same fair value gap. So we've had a little bit of jaggedness in that fair value gap. That's why I don't trade these key support and resistance type of zones. Okay, I'm looking at old fair value gaps, guys. Now these old fair value gaps, we are looking at it in terms of a trade condition, and you can clearly see that we have these highs here and we got these lows down here. Now these highs are liquidity because they are around this daily fair value gap. Now price action is coming down into those key PD arrays and it's making it jagged. It's basically coloring that fair value gap. So anyone who would be looking at this as a key zone and saying that, resistance broken and now it's being turned into a support, look at all of this jaggedness. Where's the support in that? It's crazy, man, right? So it's making it a little bit jagged, but it is what it is, man. Price action, it does what it wants to do. Okay, So now that's out of the way, what price action is essentially doing, right? It's coming all the way back to rebalance the, well, breakout of that consolidation. That's what price action is doing. It's just coming back to rebalance all of these bullish candlesticks. Okay, now let's look at it in a 4-hour time frame. No, I haven't looked at a 4-hour time frame in a long time. Okay. So let's put out the session breaks and delete these guys because they've accomplished their mission, right? So we still want to qualify this particular fair value gap as an idea for it to go higher. But then as we go into the lower time frames, what we are able to see is that in the opening hours of the day, we've had this fair value gap. And this fair value gap is breaking structure here. It's creating a market structure shift. Do you see that? Those guys that try to go long, there's a market structure shift that happened, and it is timed based. Do you see that? Around the opening hours of a new day. So there is our opportunity. Since we don't want to wait for a 24-hour candlestick to close, let me show you how the daily is before I talk on this particular next setup. All right, we essentially wanted to see price action going higher. But then in the lower time frames, we are getting new information. Okay. If we piece this together, guys, look at this. We have this, oh my God, what is this now? Driver update. Come on, man. You want to update at this particular time? Really? You guys, no way, man. So essentially, we're having trouble with this fair value gap. It is the mid-month. So we've come into that fair value gap and we've taken out the buy side liquidity right here. And we are trading inside of that fair value gap. So on the lower time frames, we've already have a setup, but on the daily, we want to wait for this 24-hour candlestick to close to see if it's trading, to see if it's going to close above or below this fair value gap. Is it going to respect it or is it going to disrespect it? But if we look at the lower time frames, like the 4-hour, I know, guys, I just had a change of bias. Yes, I can change bias in an instant, just like that. Okay, so this fair value gap is providing me with a lot of information because it's laying on top of the daily fair value gap. So there's a market structure shift that is happening right here. So price action is trading inside of that and it's offering shorting opportunities right here. So of course you guys wouldn't sell into a 4-hour time frame. That is pretty risky. I mean, look at that, 18 points just to qualify for a fair value gap. Damn. I mean, that's too much risk. So we go lower into these time frames, baby. So let's go into the hourly, and there is the hourly time frame. Okay, and we're gonna split this fair value gap into quadrants. Okay, and these particular quadrants, as you can see, we have the 50% being respected. Is that bullish or bearish? That's bearish. So from an hourly perspective, we have already derived information from the lower time frames because we've laid this fair value gap on top of that yellow daily fair value gap, and we've disrespected it. Ain't that insane? And if you look at this this candlestick here, okay, now we are looking for information as to qualify this as a trading short setup to go lower and attack these consolidation lows. Okay, yeah, that fair value gap, mid-month fair value gap of July, I tell you this, man, those fair value gaps are trouble. They are trouble. If you're gonna trade any other fair value gap on Step Index, trade the mid-month fair value gap, because if it hits the fair value gap and it responds, it's going to keep on going up until sell-side liquidity is taken. It's not gonna stop, and it sometimes will produce these particular fair value gaps. You can't miss them. Okay, you can't miss them. I changed my bias right in an instant, just seeing this fair value gap, and I'm like, wait a minute, I've seen this before, a million times probably. Because I would be looking at this key level and saying, okay, there is a resistance that was broken, and now it is being turned into a support. But look at this guy here, right out of nowhere, right in the opening hours of the day. Bam! Right? Sell side liquidity, baby. We're going lower. So that's it on the hourly time frame. And we're gonna see the 1 minute as to how it delivers into these fair value gaps. So there was a particular fair value gap that I was interested in. It was this fair value gap right here. We essentially touched that fair value gap. We actually missed it by a few ticks, and it went higher, and it struggled with the 50%. Now this 50%, it has this fair value gap right there. That is the PM session opening range fair value gap. And as you can see, since the opening of the 2 o'clock hour, we've went lower, created a market structure shift, come back up into the fair value gap, the PM session opening range, the very first presented fair value gap, and we've went lower. And we've practically rebalanced somewhere here. We essentially don't want to go above the 25%. That's what price is saying here. So it's trading back, right? We essentially want to utilize this fair value gap as an idea to send price lower. So right around here, I would have a short, and I would have my stop loss just above this 25%. And where is the target? Well, you already know the sell-side liquidity down there. Okay, that's what I'm anticipating, following through with this fair value gap and the mid-month fair value gap of July. So I still want to see price action going lower. Okay, so I'm back on the daily time frame, and we're going to delete these. Okay, so what just happened with price action, okay, from a daily perspective, is that we've opened, we've went higher, we've taken out the buy side liquidity, and we are now proceeding to go lower. So it's kind of like the ICT 2022 YouTube model. If you're looking at it like that, from an hourly perspective, this is how it would look like. This is the high that we violated, right? And this particular high is inside of the mid-month fair value gap. And we are trading inside of it, rebalancing. Look at that. The upper quadrant right here is being rebalanced and it moves lower. Okay, comes back into the lower quadrant of the very same mid-month fair value gap of July. It's coming back inside of it, just in the consequent enrichment, just below that, it's rebalancing. And it trades even lower, and it still is kind of like not in a hurry because it's building this pseudo support and resistance that price action wants to go higher. Well, it's essentially marking time, waiting for this particular day for price action to trade inside of the hourly fair value gap. So yeah, man, that's what price is doing. It's moving, right? It's going lower now. So how far can it go? That's the question. How far can it go? So we have to look at the daily time frame, and we can go as far as the contrarian trade fair value gap right here, just below this low, all right, or even lower. What makes me say that, guys? What makes me say even lower is the weekly time frame, which we haven't looked at on this year's commentary. Yep. Let's go ahead and look at the weekly time frame. So we're going to be jumping out of this, and we're going to go to derivative implementation, and this is it. Okay, this is the derivative implementation, and they have rather different charts. So this is the one that I'm utilizing, snap index. And oh, I haven't opened this in a long time. Well, this one, it does not have the weekly time frame, but the Riv trading view, it has a weekly time frame. Okay, so we're going to be zooming in. This is snap index on the weekly time frame, guys. Okay, we have the market. Let me just put it like this. Okay, from the 20th of July, I can clearly see that the 20th of July, since we had this movement lower, breaking below this particular low, and I said around the 20th we anticipate the market to reverse. Okay, and that's what price action did. Now this is a weekly perspective of it. Right down here I'm calling the market higher. So it has been going up, and it has reached a form of a weekly resistance. So how does our resistance on the weekly time frame look like? There it is. It's resisting the 25% of this particular week. Okay, the 25% of that is a quadrant level. It's a powerful key level. If price action does not want to reach the 50%, it is practically telling us about order flow that price action does not have the means to get up into the 50%. So it's bearish. So it retraces. So that's why I'm looking at the daily time frame, and I am qualifying an old fair value gap. That fair value gap, it is the mid-month fair value gap. And that mid-month fair value gap is, well, the neighbor of the 25% consequent enrichment. So as I said, the mid-month fair value gap are going to be trouble. So utilizing that and coupling it with the weekly time frame, wick 25%, it gives you a powerful resistance. And coupling it with the new trading month, we just had the opening down here. And if you're a seller of the marketplace, you want to be selling above the opening price. So a good way to sell short the mid-month fair value gap. That was a pretty good trading setup there. So what if you didn't sell short at the 25%? Well, there are other means, right? There are other means to skin a cat, guys. So we've had the opening hours of our new particular trading day, and we had ourselves a new day fair value gap right here. Now this is in gray, and if you notice, we have the Wednesdays, or is it Thursdays? Okay, the Thursdays fair value gap. It's a new day fair value gap as well. And ever since we've went lower, we have never actually tried to come back from that particular response from that fair value gap right here. We've never had an interest going higher into this fair value gap. So these opening ranges, these opening fair value gaps on the hourly time frame, they are really powerful, man. Really powerful. So yeah, that's what I've been interested in the marketplace. So yeah, I have a short somewhere here, okay, and I'm anticipating that the market will go lower. So if you're not inside of that fair value gap for a short, how would you then participate? Well, I did mention that there is a particular inefficiency right here that I am interested in. So I'm going to be waiting for price action to be coming back into this. If at all it comes back into there, it'll offer me a nice low risk setup. Okay, so that's what I'd be interested in. So yeah, until then, guys, I will see you guys in the next video. Hope you enjoyed this one. Toodles.